to ETF Watch. I'm Christian Magoon with Amplify ETFs, and it's the summer of crypto. Lots of legislation and headlines about cryptocurrency and blockchain, stable coins. You, as an advisor or an investor, may have a lot of questions about it. We're going to break down that legislation today and talk about several Amplify ETFs that may stand to benefit. So, the first piece of legislation that's been signed into law by President Trump is the Genius Act. And that really focuses on creating regulatory environment for stablecoins. And stablecoins are just another way to pay for goods and services or to transfer money via cryptocurrency or blockchain. So stablecoins are not a security, they're not a commodity. They're simply a form of payment that will be backed by the equivalent value in US Treasuries or US dollars. So this really digitizes the payment systems. Now, these stable coins will be built on certain types of cryptocurrency using their protocols for the blockchain. Cryptocurrencies like Ethereum or Solana or other so-called level twos. So this is very bullish for those types of cryptocurrencies. It's also pretty bullish for US Treasuries and US dollars because they'll back these stable coins. What are the benefits really of stable coins? Well, we have a grid here created through research from Amplify and A16 that really talks about the variety of ways stablecoins could make payments more efficient in terms of time and cost, from credit card to debit card to ACH transfer, international wire transfer, money remittances, or peer-to-peer payment applications. In short, this really is the fastest and cheapest way to transfer dollars, and thus stablecoins should provide a lift to US dollar dominance as well as overall GDP. The two other pieces of legislation that have passed the House and are now in the Senate are the Clarity Act, which seeks to regulate digital assets and determine tests for what a digital asset is, for example, maybe property or a security or commodity. The other act is the Anti-CBDC Central Bank Digital Currency Surveillance Act. And simply put, that's seeking to ban the Federal Reserve from creating a central bank digital currency that allows the government to control and observe everything you do with your money. These two acts are likely to continue to progress in the Senate and could be signed in early fall of this year. So with all these regulatory tailwinds for the crypto and blockchain space, let's talk about several Amplify ETFs that we think are well positioned to capitalize on these trends. First is Block. This is our actively managed blockchain and cryptocurrency stock ETF that's been around since 2018. This ETF selects stocks that are not only in the blockchain ecosystem, but also in the cryptocurrency ecosystem. In addition, it owns Bitcoin ETPs. Again, being actively managed, it seeks to control risk both in up markets and down markets. And over the last 5 years has generated a 25% average annualized return. This year has been a good year for Block, up 40% year to date, and certainly has benefited from a lot of what's going on in this digital payment legislation related to stablecoins. Indeed, 31% of Block's portfolio is related to digital payment platforms. So take a look at Block as a great capital appreciation opportunity to play this move into digital payments and stablecoins. Speaking of digital payments, we have the only digital payments ETF in the marketplace, ticker iPay. iPay just celebrated its 10-year anniversary, and over the last 10 years, the whole payment space has changed. 10 years ago, people were just starting to make digital payments once in a while on their computers. Then it migrated to mobile devices. Now it's becoming more and more a part of our everyday life. With this recent stablecoin legislation through the Genius Act, we think this area is ripe for a real renewal of its growth proposition. Let's take a look at some of the top holdings of iPay, and you can see companies like Coinbase, PayPal, Block, which was just added to the S&P, American Express, Fiserv, companies at the forefront of innovation in this new regime that has been ushered in by the Genius Act. And how they embrace stablecoins as well as other cryptocurrencies will be telling. iPay is the only ETF focused in this area, and we expect a renaissance to happen in the digital payment space based off the recent legislation. Look at iPay as a potential nice complement and forward leaning allocation to the future of payments and financial services. That's the Amplified Digital Payments ETF, iPay. Finally, with all this cryptocurrency news, you can't escape what's going on with Bitcoin. Bitcoin has recently been at all-time highs and continues to be in vogue across a variety of different types of investors, from retail, institutions, even governments now. Amplify offers several different Bitcoin ETFs that implement covered call strategies, which allow you to have some of the upside of Bitcoin, but also material amount of income. Our Biddy and Baggy are just over 75 days old and have been attracting assets and paying out monthly distributions that are quite attractive. In addition, these funds have thus far been able to outperform Bitcoin in terms of total return. So if you're looking at allocating to Bitcoin, but maybe don't want all the volatility, take a look at both of our Bitcoin covered call ETFs, Biddy and Baggy. So in this summer of crypto and blockchain legislation, is your portfolio participating in these opportunities? We hope it is. If it isn't, take a look at a variety of our Amplify ETFs that we think will serve you well in this new regime. Hey, I'm Christian Magoon from Amplify ETFs. We'll see you next time.